You learned a lot about money from your early upbringing, right? From that early context.
Yeah, because what she said to me was, look, you know, I even do this today with wealthy people. Call me up all the time and say, look, they get divorced. This very wealthy woman got divorced recently, and she said, look, I'm divorcing, and she was a billionaire. She was divorcing. She was more multi-billionaire. And so she said, look, I'm getting everybody's calling me up to be my advisor because I'm separating from my husband. It's all his guys that did all the management of our family wealth. Would you be my advisor? I said, no, I don't do that. But I can just give you some basic advice, and you can hire people that stick on the mandate. And I gave her Georgette's strategy, but I had her do something else too. I said, let's get a piece of paper. You're a billionaire. Let's put everything on this piece of paper on the last 90 days that you've spent on, whatever the hell it is, I don't care. And let's put on, no computer, no spreadsheet, on this, let's look at all the income that you've made off your portfolio as it stands now, whether it's gold you have or land or stocks or bonds. Let's just do a gut check on, do you outspend yourself? She said, why would I give a shit? I said, wouldn't you like to know how much money you're burning living your lifestyle the way you live it? Just out of interest. Maybe you have enough for the rest of your life, but maybe you want to give some of it to your family one day or give it to charity. Wouldn't you like to know? Because one of my rules is never outspend yourself on any 30 or 60-day cycle, ever. Just ever. I don't have any debt. So I'm very careful about that. And we went through this little thing. She freaked out. She was pissing away money, just bleeding hundreds of thousands of dollars a week. I mean, I don't care how rich you are. You don't want to be stupid. And I said, does that shock you? One or two things has to happen. I mean, you're losing millions of dollars a quarter. Like, why? Why? Like, you've had nobody restrict what you do with your money? Because you're going to have to sell stocks at some point, or sell gold, or sell land to keep this up. And are you really that happy? Like, what's all this shit you're buying? Like, what is all this crap that you don't need? It was an eye-opener for her. So my point is, most people don't do that exercise. I don't care if you're only making $56,000 a year, or 68, the average salary.
So are you in the camp that you shouldn't spend money on the small things, like the coffee? If you don't need it, you should make the coffee at home. Is that kind of...
I can't stand it when I see kids that are making 70 grand a year spending $28 for lunch. I mean, that's just stupid. It's just, think about that in the context of that being put into an index and making 8 to 10% a year for the next 50 years.
What's an index for someone that doesn't?
So, okay, I mean, I even have it. I even built an app for this purpose, just so I could. There's many apps out there. You don't have to use mine. Mine's called Bean Stocks, but you just allocate 15% of your salary, and it automatically puts it into two buckets: some stocks and some bonds. The stocks are ETFs, exchange-traded funds that just track the S&P 500. Very simply. Mine's a little.
The S&P 500 is the top 500 stocks.
Yeah, and so it's just, people that tell me, oh, I can beat the S&P, I can pick stocks. They're so full of crap. Not over the long period they can. So it's better, you might as well just own ETFs. I have a version of the S&P that I designed with other people that strips out all the crappy balance sheets, but that's just me. You can just buy the index that you want, the ETF. And then you pay low fees, and then over time it appreciates, and then if you buy some treasury bills or fixed income, you get that. You should have less of those when you're young and more than when you're older. That's just diversification. But the best test, I do it with my kids' friends too. Go into a closet. Go into your closet and look at how much shit you have you don't wear. Because you either bought it because you thought you were going to wear it and never wore it, or wore it once, and you end up wearing 20% of your portfolio all of the time, and 80% you pissed away. I mean, that's really stupid. And so for a young person, a young woman or man, don't do that. Start just buy the minimum stuff. And another thing I learned from my mother, this is interesting because I saw it happen at her death. She, would buy 2 Chanel jackets a year, really expensive Chanel jackets, handmade Chanel jackets. I do business with Chanel because of, the legacy of my mother and the whole Coco Chanel thing in watches. I love those guys. And her theory was, this will never get old. And it never did. A classic vintage Chanel jacket from the 50s that's well kept is worth a fortune today. The classic, it still wears beautifully. They're so well made. So she wouldn't buy crap, she'd buy really good stuff, but just small amounts of it. And over the years, she'd built up this portfolio of amazing clothing. And when she died, the women in our family had a cat fight over her portfolio. Unbelievable.
Is that in part why you have so many watches? I've noticed you have a watch on either wrist right now.
Yeah, I'm pretty big in watches. I mean, but watches to me, every piece I have marks something in my life that was important. A deal, a child, graduation, something, every piece. I've got a lot of watches.
How many have you got?
I don't even say anymore because of the insurance policy I have. I got a lot.
Do you invest in, you're talking about your mother's investing strategy, and one of the things you said is she invested in dividend stocks.
Yes.
What is a dividend stock, and should I be investing in dividend stocks?
Yeah, I mean, a company, if it's profitable and it's operating and its business plan is working and it's growing market share, at some point says, I'm going to distribute some of the success of our profits to our shareholders. That's a dividend. And so they send that cash to you, and you can either redeploy it in other ways or live off it or whatever. Many tech stocks until recently did not pay dividends, but now the behemoth tech stocks do pay dividends because the demand of an aging population is I need to eat. And so I like to own the stock for growth, but I also want to get some of the profits. And so dividend paying stocks used to be utilities, but not so today. Every sector has dividend paying stocks, so I prefer to own dividend paying stocks, div payers. And then I also own fixed income products. I also own crypto now, and I own alternative assets like gold and watches. My watch collection's actually done quite well, even though there's been a correction. There's volatility, but I have some watches that have, I bought for $200,000 that are worth over $1 million today.
Crypto. So are you still bullish on crypto as an investment?
I am actually, but people get crypto confused with its real potential. Let's talk about digital payment systems, because what's about to pass first, we're days away from this happening, is the Genius Act, which is actually the Stablecoin Act. It was just passed by the Senate 48 hours ago. It's going back to the House. I actually worked on that bill 2 years ago. So if that bill passes, it's really nothing to do with speculating on crypto. It's a new form of payment. So if I wanted to order a watch from Simon Britt, who's somebody I buy watches from, he's a master watchmaker. Right now I have to take US dollars. I've got to get through a know your client prerogative. I'm treated like a criminal by transferring $100,000 over, turn it into Swiss francs. It takes about a week. I get screwed for about 200 basis points in the whole thing. If he accepted USDC, which is actually a stable coin backed with the US dollar, just went public, very successful IPO. I was a shareholder in that company too. That's one of my best IPOs in the last 2 years. The transaction would happen in less than a second. And the fees would be a hundredth of what the costs are right now. So it's a digital payment system. The price there's no speculation on it. It's backed by the US dollar, treasury bills. So it's sort of a new form of digital payment. That's different than Bitcoin, which is a speculation. If you believe in Bitcoin, you think it's a digital gold and you live through the volatility. I believe in both. I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. So the way I own it is I own the exchanges. My exchange in one called WonderFi up in Canada just got acquired last week or 2 weeks ago by Robinhood. I'm happy because I think Vlad, who runs Robinhood's great. And now he's got 1 million plus accounts in Canada, a market that he'd never participated in. But the point is, this is never going away. It's going to stay forever. So how do you participate? You can buy some Bitcoin, just like you can buy gold, buy it in an ETF, or actually own it yourself. You can buy the exchanges. You can use, you can buy Circle stock now. It's public. Circle makes USDC. You can buy USDC in an account and make 4.1% interest on it right now. So there's a lot of ways to participate, but yes, I'm here to stay. But I've grown up. I was around during the period where the crypto cowboys lived. And I survived that all. And I even testified in front of the Senate and the House and whatever else the testimonies were during the tumultuous period. And most of those guys went to jail.
Your portfolio in terms of Bitcoin allocation or crypto allocation, what is it now?
It's at about all in. We marked to market last month. It was 19.1%.
19.1%.
Yeah, I have to keep it under 20. It's a sector. So, but remember, in that is the cryptos itself, Bitcoin, the USDC, and the shares of the infrastructure companies like Circle and everything else. I've got, it was a very successful IPO.